This episode of Talk Your Book is proudly brought to you by Stock Doctor.
Yeah. Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money, get the money.
I'm Michael Goldberg, ex-Caulfield Ramarian, where all the best products are raised. Thanks very much for coming on Talk Your Book.
My pleasure. Thanks for having me.
Now, Collins Street Value Fund. What sort of stuff do you guys look to invest in?
We're an Australian-only, long-only value fund. I suppose we have a bit of a contrarian take on things. We launched our business in 2015. The fund went live in the beginning of 2016. That first year, we had some excellent results. I think we're amongst the top 10% of funds of our type. In 2018, Morningstar had us as the #1 performing fund of our type. And if all goes well over the next couple of months, it looks like we'll be close to that again in 2019. So I suppose that's a bit about us.
Now, in the interest of full disclosure, I know what stock you're going to talk about today already, and it's a stock I also own.
Okay.
So I don't want to be accused of being a part of any pump and dump group. So now that that's out of the way, what stock is it that you'd like to speak about today?
I thought we'd talk about Paradigm. It's a stock that we've followed for quite some time. We actually came upon it after one of the members of our family required some treatment on some osteoarthritis. And we were told that there's this drug that's in the testing phase that seems to be having good results. And so he put us onto this company called Paradigm. So we went and we had a look, and we discovered that although they were still in the process of stage 2 clinical trials, they were also treating some 500 patients with osteoarthritis around Australia through what's called a special access scheme, or an SAS. So the challenge with these sorts of companies normally is that if you're a biopharmaceutical company, either your product's going to work or it's not, and you have to sit through stage 1, stage 2, and stage 3 trials to find out if that's the case. What we found here is that it's a little bit different. Number one, this drug has been around for 65 years, predominantly used as an anticoagulant, mostly out of Europe. And they found out quite by accident that it also has positive impact on sufferers of osteoarthritis. So they'd been testing on some 500 patients through this special access scheme, and the results that were coming out were fantastic, fantastic. This was before the stage 2 trials had come out. So we had a look and we said, you know, what's the difference between the SAS and the official clinical trials? The difference is a placebo. So sure, the numbers might be a little bit different, but we were getting results from the special access scheme that suggested that better than 90% of patients who are using this drug saw an improvement in their pain. Yeah? Around about 50% had seen their pain down by half. So we got comfortable at that point to say, you know what, we think this drug has efficacy. We think that it's probably got some legs, unless 500 patients are all lying to us. And so we cornerstoned a placement that the company were doing at around about 70 cents. The company's come a long way since then. They've now completed stage 2 trials, which not surprisingly passed. You know, I used to say that it was a bit like going into a test with the questions, you know, in your back pocket already. We had a strong suspicion they were going to pass their
Because of the special access scheme data that was readily available.
Correct, because 500 patients had been treated. The reports were out there for everyone to see. The company were releasing those reports, I suppose mostly as marketing material, but from a clinical perspective, it was very, very helpful. But what they did after that was they assessed what's the impact on the actual underlying disease. Is this drug modifying the disease? So they did 2 things. Firstly, they had a look at MRIs of the knee. The knee was the primary joint that they were focusing on. And what they found was, from start to end of the 6-week set of treatment, the actual disease or the indicators of the disease, the bone lesion, had reduced by 30 to 40% in a lot of their patients. That's obviously a big deal. We're no longer just talking about treating the symptoms. We're now really talking about, is this actually having an impact on the underlying disease? After they'd gotten through the MRIs, they also started doing blood tests and comparing blood from before the treatment started and then again after the treatment had ended. And what they found is that there are 2 biomarkers that predict osteoarthritis growth. And not only did those biomarkers stop going up, but we started to see a reduction in those biomarkers. So look, I suspect they'll continue to market it globally as a pain treatment option, because at the moment the only options out there are really opioids, and nobody really wants to get hooked onto opioids. But it looks like as they go into their stage 3 trials, which they're fully funded to cover, part of the focus might actually be on potentially healing the actual underlying osteoarthritis rather than just fixing the pain.
Now, you mentioned it's a drug that's been around for 60 years, originally used to treat an inflammatory bladder disease. It's a repurposed drug as opposed to a brand new drug. It obviously has implications for safety, but what implications does that have around patent protection as well?
It's a good question. I think actually originally it was used in surgery as an anticoagulant,
Okay.
but more recently Johnson & Johnson have a patent to use it as an oral drug, as you mentioned, to deal with tummy troubles. Now their patent actually expired about 10 years ago, and despite best efforts of some of their competitors, no one's been able to replicate IPPS quite the same way that they have. They sourced their drug from a company in Germany called BeNe Pharmaceutical. They've been doing this for generations, and as we currently stand, they are the only American regulator approved producer of the drug for human consumption. The process of refining the product to a level that is acceptable by the global regulators for human consumption is much, much harder than people might think. And so, yeah, there is protection from an IP perspective, but also they've currently got a 20-year agreement with BeNe where BeNe cannot provide the drug to anyone other than Paradigm for injectable purposes.
So if they were to extend that exclusivity with BeNe, there's a potential they could continue to get the same price or margin from this drug even after their patent protection's gone.
Well, you saw with Johnson & Johnson
Yeah.
that even though their patents expired, they've actually increased the price for the oral use of PPS. So the short answer is yes.
So we've got phase 3 trials coming up.
Yep.
What are you expecting them to cost? And do you think there's the potential Paradigm will do a deal with a big pharmaceutical group to fund those phase 3 trials?
I don't think they need the funding to do the stage 3 trials. They did do a capital raising not that long ago to go fully funded with osteoarthritis and MPS stage 3 trials on the horizon.
So what have they got in the bank?
$75 million.
Yeah.
Which I believe is more than enough. I think it probably costs around about $50 million to get through stage 3 trials. What I do expect, though, at some point in the not too distant future, is some sort of commercial arrangement with one of the larger pharmaceuticals. Again, I don't think they need the help for the stage 3 trials, but I suspect they perhaps might like some help with the distribution of the drug once they commercialize it and start trying to sell it.
It's just such an astronomically huge market. You mentioned MPS, but the osteoarthritis market as well. How big do you estimate the size of the market to be?
So I actually previously underestimated it.
Yeah.
It turns out that around about 10 to 15% of people in the first world have some form of osteoarthritis. So that would put it somewhere in the vicinity of 31 odd million people in the United States and around about 3 million people in Australia. I'd previously thought that the addressable market in the States was around about 2-3 billion per annum. But Paul Rainey, the CEO of Paradigm, at the most recent general meeting, put up a slide suggesting that just 10% of the US market would be worth in the vicinity of $9 billion. That's with a B.
And you mentioned the opioid crisis in the States, which is just causing a huge amount of havoc over there. Do you think that in some way benefits Paradigm with potential for fast-tracking of FDA approval or any other benefits potentially to get this drug as an alternative usage to opioids, which are causing so much damage?
Look, I suppose it's a terrible thing to see benefit in what is such a terrible happening in the States and also in Australia, but you're 100% right. At the moment, like I said, there's not a lot of treatment for osteoarthritis other than managing the pain. And once your regular painkillers are no longer sufficient, opioids are what we move on to. It's what the industry tends to move on to. And of course, opioids are quite addictive and can have a devastating impact on a person's life. So there is some talk, and there has been some actions to try and fast track the approval of Paradigm's drug, IPPS, because it would replace a lot of treatment that's currently getting covered by opioids, and that would obviously be a big, big positive.
And there's the potential for provisional approval of the drug to be sold in 2020. What would have to happen for that to occur, and how would you see that? What sort of funding could Paradigm expect from that if it was successful?
Yeah, look, I think there's some work being done in Australia to try and get provisional approval to start selling IPPS in Australia. I don't know that from early it would have a material impact on earnings, although I do suspect they'll start getting revenues. If they're successful in getting approval in 2020, they could start getting revenues as early as mid to third quarter 2021.
Has there been any talk of what price that'll be sold at, or is it too early?
Look, there has been some talk, but the company have promised they're going to bring on a pharmaceutical economist to come up with the proper pricing.
Yeah.
Through the grapevine, I've heard it will cost around about $2,000, $2,500 per treatment from start to end.
And so that may not have a material effect on revenues, but if that provisional approval was to take place, you could potentially see the uptake and extrapolate that across other regions around the world. Is that how you'd be using it?
Absolutely. Once, at the moment we're reliant on the 250 odd people that were taking part in the clinical stage 2 trials and the about 500 people that were involved in the SAS, although I believe that's probably increased to about 1,000. If you can go mainstream and start selling it to the wider markets, obviously you've got a much wider set of data that you can rely on. Again, normally you wouldn't expect to get provisional approval for a drug that hasn't yet gone through stage 3 clinical trials, but because this is such an old drug with such a strong safety record, the risks of giving provisional approval are quite low. So
is there even a safety component for the phase 3 trials?
they're assessing the negative side effects of the drug. Obviously, that's part of the program. But the feedback that I've received so far is that the worst I've seen is some headaches, which relative to crippling knee pain is a small price to pay.
And are you putting in your model expectations that will be used for any other inflammatory diseases?
Yes and no. I mean, we're aware that there are a number of other potentials out there for the drug. Ross River virus is something that they've got some clinical trials on. It looks like there's some promising results there. Obviously, osteoarthritis, MPS, as we mentioned, which is an orphan drug, which has massive potential, and even something like hay fever treatment, which they'd previously tested and had failed on, but there's some suggestions that they've worked out why that was the case. I think when you look at osteoarthritis and the addressable market, it's so tremendously huge that you don't really need to start worrying about the other offerings. Just working out what the osteoarthritis market is worth is such a multiple above where we're currently at that it almost makes the rest irrelevant.
I'm starting to feel like a bit of a Perth stockbroker here. So in the interest of balance, what are the risks to this play and what's keeping you awake at night when you're analysing the stock going forward?
The biggest risk from my perspective, I think, is not on the efficacy of the drug, because it seems like it's working. From everybody I've spoken to, from all the people that I've put onto the doctors to get treated themselves, from all the clinical trials that I've read, I think the risks aren't really on the efficacy of the drug working. I think perhaps commercialization and distribution will be the biggest issue. And we all know that there are plenty of companies out there with wonderful ideas and wonderful products. When it comes to selling it into the market, that's always a different kind of challenge. You need different kinds of people. So I suppose one of the biggest risks for Paradigm will be, are they able to bring on the right people to get them from a pharmaceutical company into becoming a company that actually sells pharmaceuticals? Hopefully the answer is yes. I think Paul has a reasonable background on these sorts of things, and I think he's a very, very strong clinician and a very, very good CEO for where the company's at the moment. But I think he also recognizes that he needs to bring in people to do the sales job. And that's why I think what we'll find is not a JV with a larger pharmaceutical company around getting the efficacy proven, but rather on getting the distribution done.
Now, I'm a very simple man, which is why I'm doing podcasts and not managing money. It feels to me that it's somewhat a binary investment. Either it's worth next to nothing or it's worth a multiple of here. Is that how you're viewing it?
Yeah, 100%. I mean, with biopharmaceutical companies and technology companies often as well, it's very binary. Either the product works and it's worth a lot, or it doesn't work and you're back to square one. So I suppose there is a risk that there's either a lot of upside or a lot of downside. But again, we can only go on what's been provided to us. And all of the evidence that I've seen thus far suggests that the medicine does actually work.
Michael Goldberg, thanks for coming on Talk Your Book.
Thanks for having me.
If you're interested in building your own investment process, make sure you check out Stock Doctor, the proud partner of Talk Your Book.